So, what am I saying to you? If they give me a wrong net profit, so they gave it to you like this. Can you see? There they tell you net profit as per profit and loss. Now what is profit and loss? If I look at my appropriation account, at that side is profit and loss. And what did I tell you is that profit and loss? It's net profit before tax. Okay, so just be aware of it. So now they give you net profit before tax, but they also tell you that these adjustments was not taken into account. So meaning that profit is wrong. So you need to fix it. So the first thing, you go look. If it's an income, it will almost make your profit more. Ne? If it's an expense, it will make your profit less. So the ones where they tell you, oh, we forgot to put the trading stock deficit in, then immediately you know that's the expense, it's going to make my profit less. But now what they also do is they will tell you, oh, we had insurance. We showed the full insurance, but 3 months of that amount was prepaid. Can you see they did show the expense, but they forgot to adjust the expense. So now you just need to take the adjustment into account. You see? Now I want you to remember this formula. Remember, I showed you this. So now we know. It's very easy. If it's an income, it will make the profit more. If it's an expense, it will make the profit less. But now, let's quickly go look. My income. If I go look at my income, if it's an accrued income, what does accrued income do to my income? What does accrued always do? It always plus. And if income plus, it means profit plus. You get it? What does an income received in advance do to an income? It minus, future minus, meaning my profit will minus, because if my income becomes more, my profit becomes more, which means if my income becomes less, my profit becomes less. Okay, so income works with the profit. Expenses works against. Let's look. If I do an expense and I have an accrued expense, what does it do to my expense? What does it accrued always do? It makes my expense more. Now you can see expense is, I'm going to subtract expenses. So if this amount here becomes more, what's going to happen to your profit? Your profit is going to be less. If it's a prepaid expense, we said future makes it less. So if this amount that I need to minus becomes less, what will happen to my profit? It will increase. Okay, so now let's remember that. Is everybody sharp with that? So with income, income plus, profit plus. Income minus, profit minus. Expenses, expense plus, profit minus. Expense minus, profit plus. Yes.
And what is the other word for accrued expense?
Oh, another word for accrued expense is literally expenses payable. And for accrued income is income receivable. That's literally what it is. Another name for income received in advance is deferred income, or prepaid will be deferred expenses. I'm deferring it to the next year. Okay, so now let's do this. So the first one I see is they say interest on fixed deposit. So is this an income or an expense? It's an income. So it works with the profit. Okay. So now, interest on fixed deposit is earned at 10% per year and not capitalized. Does capitalization have any influence on my income statement? No. This just shows you where to classify it in the balance sheet. That's all. But the income statement, it doesn't matter.
So this would be classified in the bank?
Yeah, so it would be, so usually every month I will receive it. So it would be bank, interest on fixed deposit. And the part that isn't paid yet, let's say my fixed deposit goes over the financial year, so there's a part that hasn't been paid yet, then that would be accrued income.
Okay.
No interest has been received. Can you see this is and that 40% of the fixed deposit will mature, that's for the balance sheet. Okay, we are interested in this little part. No interest has been received, meaning this is a accrued income, which makes income more, which will make profit more. You understand? Okay. Now, if I go look at this little baby here, I'm going to say interest on fixed deposit, and it's going to make this profit more. Please guys, don't write fixed deposit. Fixed deposit has got nothing to do with the income statement. So now let's go look. What is my fixed deposit? My fixed deposit is 280. And they say we made that fixed deposit on the 1st of March. And my year ends 28 February. Can you see it's a 12-month interest? So I just say 280 times 10%. And that's going to give me 28,000. And I promise you this will only give you one tick. So let's go on. Interest on loan. So interest on loan is an expense. Right, keep that in mind. Was also not taken into consideration. So can you see the whole expense wasn't taken into account? So that whole expense I'm going to minus, because why? Interest makes less. Interest on loan makes the profit less. You can use the signs like I do here, or you can use brackets for the minus. Remember, if there's no sign or brackets, we assume it's a positive. Okay. Now, they say refer to info 4. Now, if I go to info 4, they say the loan statement received from Absa showed the following. Now, what am I going to do? Oh, I'm going to do a T. So I'm going to do a little T for loan with an opening and a closing and a bank and an interest on loan. And I'm looking for this amount. Nay, I'm looking for that. So let's have a look. My opening is 470. My closing is 394. My bank is that repayment. And if they say interest included, you say, of course. Because you know that that bank is the payment on loan and the interest. This is what you paid. Okay? And that is why this whole little T account is going to work if I balance, because I take out the interest. So, how much was repaid? 124. And now I balance on my interest, and it gives me what? 48. And can I quickly show you something? I want you to take your calculator and say 124 less 48. What does it give you? 76. Now I want you to take 470 less 394. What's it going to give you? 76. Can you see both methods you can use? You can use both methods to see the payment on the loan itself, on the original amount of the loan. You see that? Yes. So from that 124, 48,000 was interest, meaning 76 went off on the original loan amount. The original loan amount decreased with 76, and that would be the difference between the opening and the closing. So now, that 48 is going to go here. Please don't put a bracket if you put a minus, ne? Not 76, 48. You want to show the interest.
No, I'm looking for the other one.
Oh, okay. Next one. And this might give you 2 ticks. Okay. Next one. Provision for bad debt. Now, what do I know? Provision for bad debt can be an income or an expense. If I need to increase it, it's an expense. If I need to decrease it, it's an income. Now let's go look. They say provision for bad debts must be adjusted to 5% of the outstanding debtors. Now, I'm going to do it here. Okay, so let's go look at this. What is my debtors? I look at my trial balance. They tell me my debtors is 36. So 36,000. No adjustments influence debtors up until now.
Yeah.
I times it with 5. It gives me 1,800. That 1,800 is the new one. Okay? What was the old one? So the old one, I go look here, and I see the old one is 1,900. So 1,900 means I need to make the adjustment less with 100, meaning this is a income. I am making the provision less. So here I'm going to write provision for bad debts adjustment 100. Is everybody with me? Can you see they are testing if you can do your income statement in a creative way that doesn't count a lot of marks, because you agree with me that this is only going to count 14 marks, whereas the income statement usually is quite a lot of marks. Okay, because now they don't have to give bagels for all the in-between totals. Now, let's look. Next one. Next one, rent income. And this is our favorite one, because since grade 10 we've been doing this one. Yes. Okay, so here we go. They say rent income received amounted to 52,000. This includes the rent for March and April. So you agree with me, what are they saying here? They are saying we did include the rent. The rent was shown. Okay? So, in other words, I did put in the rent in my operating income. But I showed too much, because they are saying to me March and April was also included in the amount. Can you see it's an income received in advance? So it's going to be a minus, which will make my profit less. So already you're going to write in here rent income, ne? You're going to subtract 2 months, ne? Minus 2 months. Now let's calculate that 2 months. They say the full amount for rent, I'm going to do it here, the rent. Just make an indication if you do your calculation on a different place. Just make a little indication. So that rent income total is 52,560. They say this is my financial year, starts 1st March, ends 28th February. we want to calculate March and April. So they say the rent increased with 15%, meaning before increase it was 100, after increase it's 115. Can you see those two adds up to 230? Okay, everybody sharp. Or you can work out 115 and then the answer times 2. So now let's look. How many months? That increase happened on 1st of Jan. Okay, so March, April, May, June, July, August, September, October, November, December. 10 months, we received 100%. January, February, March, April. Can you see I'm counting those months? 4 months, I received 115. So the total rent I received is 1560. That's the weight.
10 times 100 is 1,000.
Oh, this is 1,000. I'm sorry. So it's 1460.
Yes.
Thank you, baby. So now I say 52560 times what I want over what I have. Can you see UK? And that gives me 8280. And now let me show you the surprise. So that 8280, I'm going to subtract here. And you know what? It's going to count 2 ticks. So remember, when I asked you to do the income statement, when you do the income statement, you would have said there, rent income is the 52560 less the 8280, and you would get an answer here, right? But now they tell you, we have already taken into account the 52. It's already included in the wrong net profit. So the only thing I didn't do was subtract the next year. Is everybody sharp? Can I continue? Okay, next one. Trading stock valued at 14,000 was damaged by a storm. The insurance accepted the claim and will cover 70%, but that will only be done in May. What do I do in my income statement? I must show my loss less the part that the insurance is going to pay out, and then that answer I show as an expense. You remember that?
Yes.
So now, how easy is this? They give me percentages. So they say, we're going to get back 70%, meaning what's my loss? 30%. So I'm going to say here, loss on stock, it's 14,000, and how much am I going to lose? 30%. And this is negative, it's a loss, ne? So that gives me 4,200. And this will give you 2 ticks. Everybody at next one. Insurance included an annual premium. Can you see once again here? Insurance was already taken into account. They just forgot to subtract the prepaid expense. So what's going to happen to my expense with prepaid? Plus or minus? Minus. And if the expense minus, what happens to the profit? It's going to plus. So immediately before you calculate, you say insurance is going to plus. Okay. And how much will it plus? Now let's have a look. They say it's 8,400, ne, for a year, because they say annual. How many months is prepaid?
6 months.
How do you get 6 months? They say 1st August, ne? So it means it's 1st August till 31st July. So if I count 28th February to 31st July, or if I count 1st March to 31st July, why do I say February? July, it will give you 6 months. March, April, May, June, July. No, it doesn't give you 6 months.
Yes, ma'am. I corrected myself.
Ek gaan vir jou klap. Not really. Okay, so let's go again. March, April, May, June, July. 5 months prepaid. Another way you can do it is you can count how many months is in the year. So, in the year is March, April, May, June, July. 5 months.
Oh, I think this is the one.
Now I'm making myself democrat. It's because why am I making myself democrat? Because I didn't draw a line. So let's draw a line. Our year starts 1st March, ends 28th February. And I think it is 6 months. Let's just make sure. So, oh no, it's, 1st of August, till 30 September. That's why I'm having it wrong. Because I don't see the visual picture. You guys, don't take shortcuts. Don't be your teacher. Don't take shortcuts. Why September?
It's 7 months.
It's paid, oh, no, it is 31st July. I'm going to go home. And all of this is recorded for the world to see. My life is over.
No, ma'am.
Oh, okay. So in this year, it was August, September, October, November, December, January, February. 7 months. So 5 months in advance. So you can count that. 12 minus that gives me prepaid. Or you can count March, April, May, June, July. 5 months. Woohoo! We have it. So, how much is prepaid? 5? Huh? 3,500. 2 ticks. So we've got 2, 4, 6, 8, 10, 11 so far. Wait for what? Okay, so I'm explaining this again. Please listen. And this is what makes this thing a higher order. Because you need to remember that expense there, they already included the full insurance of, what was it? 8,400. 8,400 is part of that operating expense. So, can you see it's only, they just forgot to take out the prepaid. So you are only taking into account that 3,500. Ne? And that's the only one, because the 8,400 is already part of the net profit. We are minusing, meaning what happens? If my expense minus, it becomes less. It means my profit is actually more. Let me show you. Let's work from a basic. Let's say my net profit was 10,000. What is it? Gross operating income was 10,000. Let's say it was that, right? If I subtract 8,400, it gives me 1,600. But now I'm telling you that 8,400 is too much. I need to subtract 3,500 from it. So meaning 10,000 less, what is this thing? 5,900. 5,949 gives me 5,1. Can you see the difference there? I need to add back the 3,500. Does that make sense? So you can see I added it back. Only the adjustment that I forgot to include when I did the income statement.
So you minus too much.
Yeah, I minused too much. So I need to add back. Remember, this is the classic understated, overstated. So meaning my insurance was overstated. Insurance was a minus. So I need to do the opposite, which is I need to plus. Okay.
Overstated is minus. Opposite.
No, overstated is opposite.
Opposite.
You can't say overstated is minus. Overstated means whatever I did too much.
Okay.
In this case, I too much minus.
Then minus.
So that's why I add back.
Okay.
Okay. You guys have to go listen to this again. So here we go. Director's fees, and this one is now an easy giveaway mark. Ne? They say director's fees of 6,200 were still outstanding. What is this? It's a accrued. What is a accrued? It's a plus. What is director's fee? It's an expense. If an expense pluses, what happens to the profit? It minus. So I'm going to have a director's fee, ne, of 6,000 extra, ne?
2,000.
Oh, 6,200. Okay. Now, they say here profit after tax. So I still need to fix my income tax. Remember, this top one here, and this can differ, ne? Don't assume because in this question it's like this, it's going to be like this in the next question. You need to go read what profit do they give you. Okay? So in this case, they gave you the net profit before tax. So I still need to subtract tax. What do they say? This is my income tax. 268, 400.
Yep.
268, 400, another tick, and this will be a bagel. How much is my net profit after tax?
Yeah.
Oh, I didn't record it.
You did it.
Okay, so let me just show you again. That 291 here is how much I already paid SARS. So if I do a T, it will go to the minus side. This 268 is how much I owe SARS. So if I look now, I owe 268. I already paid 291, meaning I paid more than I owe, which means that 23,000 is now owed to us by SARS. So if I do the face of the balance sheet, it will be part of receivables.
So maybe we don't show it in the
Income statement. Nothing in the income statement. In the income statement, I want to show my actual income tax that I need to pay from the profit to SARS. Okay, this 291 just indicates how much of this I already paid. Income tax is my expense. Okay, SARS is my asset or liability, which goes to the balance sheet.